Hi there, Serial Trader here. Let's have a look at the major US indices and looking at the hourly chart here on SPX. So since my last video there on the weekend, I was looking for this to top out essentially any time, and then early signs of kind of breaking down here would have been taking out this wave 2-4 trend line on the ending diagonal, wave 5 of potentially X, and also this overall corrective price channel, lower trend line. And we've done both those things now. So looking pretty good. So we actually made our top on Friday there, and it looks like that's probably a fairly significant top. But it is still somewhat early. I'll go through what I'm thinking here though. So before I get too far into the analysis, towards the end of the day today, I have actually put on some short futures contracts for a position, and my stop is above the high we made there last week. So just for quick reference on the futures here, my stop is just above 28.85. So I think I have it at 28.85.25. So just a quarter point above the high there. So that's my short futures position for now, with the stop just above that high. If we can start getting some confirmation and trending down here, I'll certainly adjust that stop to above break even. But right now I'm giving you a little bit of wiggle room. Okay, so back to the SPX hourly chart here. So what I think we might have going on here is possibly a wave 1 down, and we may have just done a wave 2 peak today, certainly possible, and then looking for further development in some sort of impulsive 5-wave sequence, perhaps for a larger wave A down. So that's kind of what I'm looking at here. Okay, but let me just take that away. Now if I dial in on maybe let's look at the 15-minute price chart. That doesn't look too bad. So here's our high there at 28.79. 28.79.22. Let me just make sure that's correct. 28.79.22. That's right. So from that high, I think we have what you can count as 5 waves down here. This so far looks like a corrective wave up, and I was looking at some fib levels. So from our initial move down here from the top to our high here, we got just shy of the 618 retracement. You can see we basically went in between the 61.8% and the 50% retracement. And then towards the end of the day, what actually got me interested in putting on that position, because okay, I had my retracement levels up here. I was watching. I'm like, well, it'd be nice to see it kind of start failing here if this is going to be a 1 down and a corrective wave 2 up. It can't just keep going up. I mean, I'm certainly willing to have it, touch the 618 or even go deeper up to the 786. But you don't want to just see it get to these levels. You want to see it kind of have a nice impulsive kind of violent reaction once you get to those retracement levels. So in between the 50 and the 618, pretty commonplace for that to happen. And so far it is happening. And let me just go in on even the 5-minute chart just to show you. You can see this was just kind of meandering, crawling up. Looked kind of suspect throughout the day, and then towards the end of the day, some fairly decent selling kicked in there right in this fib zone. And that's what got me interested in starting a short futures position. And of course, the initial stop is currently just above that recent high there. And obviously our targets are at much lower levels. So the risk reward is pretty good in this case. So yeah, that's what I was looking at there on a short-term basis. But back to the hourly chart. This does look quite nice. Breaking out of the channel, and just kind of what I was discussing on the weekend, we want that initial breakout of the channel, and then we want to see a little bounce up to a lower high. So far we've got that. And that's basically the trade setup where you can actually define risk against a clear level. So that's what we got now. And of course, I'm still long the July SPX 2500 strike puts. But as far as getting more precise, this is the kind of setup I kind of wanted to see to put on a short futures position. Well, now I got it. So certainly could get stopped out. There's nothing saying that the setup has to work, but this is the kind of setup I've been waiting for. So let's see. All right, I'll get rid of the fib retracement and these labels here. So broader message here is the expectation for this to trend down quite strongly is certainly still intact. If we do break the recent highs there from last week, I wouldn't necessarily say that would turn me bullish, but it would certainly question the short-term situation, and perhaps we'd have to correct further on the overall pattern from the bottom there. But right now it's looking, well, at least to me, it's looking pretty convincing that we may have a top in place. Convincing enough that I put a trade on for it. So let's see. Okay, so that's really what I wanted to go through here on the SPX chart. We'll go over to the Thinkorswim candlestick chart, and we actually, once again, I shouldn't say we still, but we once again have a new island reversal that's currently intact, although I wouldn't be surprised if it gets the gap filled here. But just to kind of point that out, island reversal once again is where you have a gap up, and then you have a price range, and then you have a gap down, and then you have a clear space that's gone unfilled between those two gaps. Now today we went up kind of close, so the gap fill will be at 28.20.43. That would be the low of Monday's candle, and today went as high as 28.15.1. So within 5 points or so, but it didn't actually fill. And actually, you know what? I want to just show you something. So just going in on this 10-minute chart, what I like about this, and I'll get rid of this yellow portion since I've pointed out that like island reversal is currently there. What I like about this is kind of this confluence. So look at this. So from our high there last Friday, from the last week, hang on, just want to get this to snap right on the exact level. What I like about this is you basically tried to test that gap. I would call it, you can either test the gap or you can fill the gap. In this case, so far we've just tested the gap because the gap, it's five points shy of being filled approximately. What I like is we got into this fib zone between the 50 and the 618 retracement, and let me just get rid of some of these other fibs so it's less cluttered. We got in this fib zone between the 50% and 61.8% retrace, which coincided with testing that gap and almost filling that gap, and then we had a nice reversal from there. So that's kind of a multiple, confluence of things there. Just the gap came into play, the fib zone, and then the reversal. I like that. But that's all I wanted to go through there on that 10-minute chart. And you can see, before I zoom back out here, this candlestick, this last 10-minute candle on the SPX chart, you saw a nice swift reversal. That's what you want to see at an important pivot. You don't want to just see it slowly fade down. That's not very convincing. But when you have that nice sharp, after such a almost relentless and suspicious uptrend all day, you just had that big reversal there in the last 10 minutes. I like that. That could be a significant level there, and that's again why I shorted some futures on that. Okay, so back to the daily chart on SPX here. I'll delete that little fib retracement. Back to this daily chart, and basically that 50-day simple moving average basically still providing some resistance, so that's nice to see. Yeah, I'd say if this was in a more bearish mode, you would get above the 50, and the 50 might then start providing some support, but that's not what we're seeing. This oscillator here, we were overbought. Now we're coming off that overbought condition, so now it's actually reversed down. That's a bit of confirmation using the oscillator that lower prices are likely. We do currently have that island reversal, and we did get below the T line yesterday, and today obviously we're closing above it. But if we can get back down there tomorrow or later this week and start closing below this daily T line, the 8-period EMA, it's also known as, that would be a nice sign that further downside is unfolding. So that's what I'm looking at there on SPX. And Dow Jones Industrial Average, very much the same picture. Do we actually have the island reversal here? Let me check. So the low here on Monday's candle on the Dow was 23,627. The high of today was 23,613. So island reversal intact here on the Dow as well. And also, let me check this candle to make sure it's an island reversal. So the high of this candle, I believe that was Thursday's candle last week, 23,598, and to be an island it has to be below 23,627. Okay, so yeah, that's definitely a clean island reversal, currently intact here on the Dow, and same expectation as on the S&P. Much lower prices. That's the bottom line. Okay, NASDAQ composite. So the NASDAQ composite, we had that nice hanging man candle on Friday, and then we had an inverted hammer on Monday, another bearish candle in the overbought condition. Then we got the break, and let's see, is this gap intact now? Obviously we had the breakdown and then the pop up today in the NASDAQ as well. Let's see, it's not an island reversal, but it might still be a gap down. Let's see, for it to still be an open gap, 85.53 is the low of Monday's candle, 38, 85.53, 38, and we went as high as 85.37, 31. So yeah, technically the gap down is still intact. It certainly got tested, but so far the gap is intact on the NASDAQ. Okay, and obviously the oscillator was overbought like the others, and now it's breaking down. Good to see. So expectation for lower prices remains for the NASDAQ, much like the rest of the market there. Okay, some interesting things on the volatility front. Maybe not so much the VIX chart itself, although we are starting a little uptrend here, breaking this downtrend. You can see we're back above, or at least we were back above some moving averages, and a little higher high, higher low pattern beginning to form here. So VIX potentially starting a new uptrend, which is obviously bearish for the indices. One thing I wanted to look at here was that VXX, the volatility ETN. So the 70 period simple moving average here on this 30-minute chart, we're now back above it, and you can see VXX beginning its own uptrend. So obviously if that continues, being that it's a volatility product, that will be bearish for the indices, and bullish if you want to go long VXX or other volatility products like TVIX, etc. Okay, so there's that. And then the VIX tool, that's also flashed a signal now. So we had this, and actually even today it's still there. We had a divergence between VIX and VVIX. So VIX making higher highs and higher lows. VVIX was making lower highs and lower lows, and actually it still made a lower low today. So it would be ideal to get VVIX back above the red moving average. You can see here it did pop above the red moving average, and that coincided with SPX getting below its blue moving average, so that was a legitimate sell signal, confirmed. But now today we've made a lower low in VVIX and a higher low in VIX. So we want to see VVIX quickly get above this red moving average, ideally. But technically the sell signal is on. Right now the blue moving average on SPX is at 28.04, and price is still currently below that as of today's close at 27.98. So sell signal has been activated here on this VIX tool, and along with all the other things I've pointed out, I think there's potential for a large downside move and a pretty reasonable defined risk now, with the recent high being the stop. Okay, well, that's really what I want to go through today. Tomorrow, ideally, we trend down. I certainly wouldn't rule out coming up and maybe filling the gap. That's certainly possible. one last little fake out, fill the gap, and then finally reverse down in a big way. Or we could just start tanking immediately. Like I said, certainly this on the 10-minute chart here today, certainly this last 10-minute bar has me wondering, well, maybe that was the reversal, and we're just going to go down from there. Certainly possible. All right, that's what I wanted to go through today. Let's see what happens for the rest of the week. I'll check in again on the weekend sometime. Serial Trader signing off.